Let's kick off a full week of trading. Hope all of you had a great holiday weekend. And it's back to the drawing board we go. Back for another full week of trading, the 18th through the 22nd. Let's begin with a risk disclaimer. We understand risk in trading. Please don't always use trade capital only. Do not trade with money you cannot afford to lose. You know the deal. All right. If anybody's following me out there on social media, please understand I need to start saying this more in the beginnings and the ends of all my sessions. I will not reach out to you directly. All right. If number one, any of these handles that you are following, Instagram, for example, Twitter, for example, that's it. At Real Chris Pulver. It doesn't change. That's my handle. Number two, I will not reach out to you directly. All right. So if you want to message me, that's fine. I'll reply, but I will not reach out to you. So all these scammers that are reaching out, soliciting, and talking about crazy crypto stuff, it's not me. Please report it. Please flag it and get those accounts taken down. All right. All right. Let's jump into the charts. Nice to see everybody today. We got a lot to talk about. A couple things. Last week's movers, everything was red. Dow Jones slightly red, negative 0.38%. S&P down 2.39%, and Nasdaq taking the worst of it, 3.93%. We had Good Friday off, so that was probably a good thing, because it could have gotten worse. This was Thursday's close. So this is the FinViz heat map from Thursday's close. No trading on Friday for Wall Street. You can see that everything was taking a pretty hard hit, including the FANG stocks, which also is dragging the overall indices down with it. We also had from, let's see, last week's moves, everything in red. We had year to date. Nasdaq is down 14.66 year to date. S&P is down 7.84 year to date. Dow is down 5.19 year to date. So everything in the red. The 10 years up 2.843% as of last week's close. That's up 132 basis points. And Bitcoin is back below 40K, which is another slide. We were up to as high as 48,000 not too long ago, but couldn't crack that 50K mark. We're back down below 40. So still some intense range trading on Bitcoin as sentiment continues to look pretty rough. Last week it was a big earnings kickoff with banks, and they just have terrible revenues. Banks are announcing anywhere between 20 and 40% misses in revenue. Earnings wise, they did okay. They beat expectations on certain metrics of their reports, but revenue is bad. So it kind of left a sour note in the markets last week. As you can see with the sell-offs. This week we have some notables. Bank of America is now, it's actually before market open. We have Johnson & Johnson on Tuesday, Netflix on Tuesday, IBM on Tuesday, Procter & Gamble, Tesla will be a big one this week on Wednesday, American Airlines, AT&T, which had a big spinoff last week with their Warner division. So WBD is the new ticker. So we have T still, which is up to $19.50, but we had a spinoff with WBD. So anybody that owned AT&T got some shares of WBD last week. We also have Blackstone. I think I said that. Alaska Air Group, Union Pacific, Snap Inc. So the old Snap Chatteroo will be announcing earnings this week. We'll see if we have something where maybe we can end up buying at the lows and get a pop up there, or we end up doing a bunch of bear call spreads this week and making some money on those. We could also just take some bearish positions and look at some long puts, maybe do some debit spreads, but we'll find out. And then Friday, Verizon, Cleveland Cliffs, and American Express. Cleveland Cliffs I'll be interested in because we're sitting around that $30 area. Is Cleveland Cliffs going to come back and tap past resistance becoming support to get a bounce? I'm pretty interested in the stock. I have some May expirations out. I've been long in this stock since, $20 and drilled the cost down into the teens. So this has been a nice run for some profit. I'm looking to still buy and stay bullish. This is a steel stock in the U.S. that is really, really solid. I like it. It's been one of my favorites, and I'm looking to have this thing go up into the 40s and 50s. So anyway, that is that. Let me go ahead and just double check things on the chat, make sure things come through loud and clear, and say hi to everybody as we jump into the charts. Obviously, I'll take requests if you're interested. Any cryptos, any Forex positions, any stocks, let me know. So we've got some people in the chat. It's good to see. All right. Chris is here. David's here. Herbert's here. Gary's in the house. Nice to see everybody. All right. Good stuff. Okay. So I'm going to kick things off with where we're at pre-market. Saw everything was a little bit soft, so we're down about 80 cents on the SPY pre-market. DIA, we are down about 40 cents pre-market. The Qs, pre-market down about $1. And look, let's talk about the pattern for a second. So, I wasn't exactly sure. Like, we obviously had that big rally post FOMC. The market was kind of pricing in, hey, the Fed's going to raise rates. They're going to do it 6 times this year. We're going to be at 1.75 to 2% by the end of the year. Okay, fine. How's the market digest that? Now, we know that this big drop with our Russia-Ukraine invasion, this is also called the Wednesday Bazooka from China because they announced that they are going to focus on markets and financials, and it was kind of their way of, I guess, disaligning from supporting the conflict with Russia-Ukraine. Anyway, rally from that. Plus, we had post FOMC rally. Now the market's getting faded back down. So technically, let's talk about where we could be heading. Okay. Now, I still think it's going to be tough to take out this low, and I think it's going to be difficult to take out this high. So I still think what we are dealing with, in truth, is just a lot of volatility in between these major levels. So the highs around 480 and the lows around 410, right? So if you think about that from let's say 70 points on a 430, we're at 437 right now. So 70 points divided by 437. So we're talking about a 15 to 16% area of oscillation. I mean, I've seen it before. 2015, 16, we had highs and lows between 20%. So I think that is, again, it's a big enough slide and correction that the market is kind of defending those death crosses, if you will, because we closed below the 200 EMA and then went back above it. So we're clearly chopping around between those major levels and those traditional 50 and 200 EMAs or SMA crossovers that signal the big like bear market and momentum. So if we're oscillating between there, we're going into a pretty massive indecision cycle. And that's why I think we just have to pick the right sectors, pick the right stocks, lower our cost bases on stocks we want to own, and focus on better pricing, buying things on sale, and having cash available, having free capital available to keep adding to your portfolio. Whether that free capital is going to go into crypto for you, if you're buying, Bitcoin, Ethereum on dips, or it's going into the stock market as a whole as indices. If you're playing things like volatility last week, certainly off the lows, but not anywhere near these, initial Russia-Ukraine highs. We also had going into the Fed rate decision, recent highs on the volatility plays as well. It has been faded back down pretty aggressively. So could we change? Sure, maybe. I am long some volatility. I'm also still in the VIXM, which I'm looking to get rid of around $34, $35. If we see volatility increasing higher, this would be a nice one to rally up. VIXY, I'm in this one as well. We could talk about some bull put spreads in this one this week. I think if we have a disappointing earnings season, which again will be interesting because banks were very conservative with their future forecasts and their forward guidance of where the market's going to be. Obviously having huge revenue misses is not a good thing to paint out there for sentiment. It just kind of continues to weigh in. But this week's earning, I'm trying to think. If we go back to that little stock twitch report, Bank of America is kind of the last of the big banks. Johnson & Johnson. I'm not saying they're recession proof, but they're certainly big enough and on the defensive side where they should be okay. Netflix will be interesting. Netflix is one I'm going to watch. There's a lot of volatility potential in this one. We're sitting at 340.80. If I'm not mistaken, I might even have an expiration this week on Netflix, which at this point is probably, well, we'd have to see a pretty miraculous rally. I think I have the 390 by 385. We collected about 240 or 250 on that. And if I lose, I'm going to lose the remainder. I'm not taking assignment on Netflix. But if we go lower on Netflix, I would consider doing another credit spread, trying to get, more. And if I can make my money back, then I will consider it. Plus, we have these massive gaps to the upside. So anyway, we'll be watching this one this week. If we come back and retake these highs, this recent high was $400. So if we hold the lows, earnings are beat, then we'll see where Netflix is at. Tesla's going to be another one that's going to have some volatility this week. Tesla sitting at 986.50. Tons of volatility on Tesla. I want to say between the highs and lows about 40%. That low there around 43%, and still haven't reclaimed the highs. Still haven't reclaimed the lows. Elon Musk is now ruffling feathers in social media thanks to his taking Twitter private. Wants to take Twitter private, offering $43 billion. There's a lot of complexities and potential lawsuits going on with that, with what Twitter is potentially doing to get Elon Musk out of the equation. But anyway, we'll let it play out. He's just doing some wild stuff, and I mean, he's one of the wealthiest people in the world, so hey, guess he does what he wants. But this will have some volatility as well. We'll see if it is a miss somehow. Maybe they're cutting back some of their unit movements for 2022 and forward. We'll find out. So that's what I'll be watching. AT&T, after the big spin-off last week, are we going to hold these lows? I like the technicals on AT&T to buy this pretty low. There's an amazing dividend on this one. This is like an 8% dividend that's fairly reliable. And if you take a look at this on the weekly time frame, I mean, I'm pretty happy to be owning AT&T. I bought it last week at 19 bucks. So owning some more, hang on to this one, get a nice little dividend on the position. If we pull back up into this, mid 20s or even the 30s, there's some nice range levels in there that I'd be happy to let go of for maybe $8 to $10 a share. If it gets all the way back to these highs, which is 99, it's like party like is 1999, back to 40 bucks, that'd be incredible. I don't think that's anywhere near near term. I think that's going to be something that's going to take years and years and years. But I do think that we can get back to the mid 20s. I think we can hold these lows and see some pretty big money dumped into it. So AT&T's one that if it holds the lows, that'd be pretty solid. Blackstone, ticker's BX. Pretty parabolic move post COVID. We are talking investment management. It's not BlackRock, okay? It's Blackstone, but nevertheless, they do a lot with real estate. So let's see, private equity, real estate, hedge fund solutions, and credit. It looks a lot like the S&P, right? Parabolic move post-COVID. We're starting to come off those highs. Are we going to test the highs, test the lows? Looks like we still have room to kind of shake things out with some indecision. So it might be a very noisy announcement on a stock like that. Snap, like I said, could be something worth watching. I'm pretty interested in going long on Snap and maybe owning the shares as we come back into the low 20s. I did get a chance to do some trading on this one earlier. I had some bull put spreads in around 30 bucks, had a nice big rally up towards 42, took profit on the long put, didn't get a sign. The stock price rallied up, never got a sign. The stock ended up making like, I don't know, $7 or $8 a share without ever owning it. So that was actually pretty awesome, just doing some options. But again, we'll see what happens. Okay, any requests? I want to take a look at dollar index, oil, gold, silver. Let's look at some cryptos, and then we'll start wrapping things up. Dollar index continues to push a little bit higher. Any major news this week for Forex? Not that I recall, but I could be wrong. So let's go to the factory. Bank holiday. What the heck's going on today? What's the bank holiday? I missed the memo. It is French bank holiday that says that's Express Transfer System. Bank holiday for the Great British Pound. Oh, it's Easter Monday. Oh, I guess Good Friday wasn't enough. All right. So European banks closed, or Europe's closed this week for Good Monday. We have Governor Orr speaking out in New Zealand. Let's go to high impact news for the week. And let's see what's sticking around. So all day Monday, we have CAD CPI, Swiss National Bank Chairman Jordan speaking. So a lot of speakers it looks like this week. CPI coming out of Canada on Wednesday. Philly Fed Manufacturing Index unemployment claims on Thursday for the U.S. Bank of England speaks. ECB President Christine Lagarde speaks. Fed Chair speaks. Where's Powell at? Panel discussion titled Debate on the Global Economy. Awesome. Super vague. Retail sales out of the UK. Flash PMI out of the Eurozone. And that's it. So a lot of, I guess, PMI coming out this week. We had CPI data. Inflation numbers, we know it's 8.5 right now in the U.S. We know G20 is still, I have this global inflation, that's crypto. Where's my global inflation at? Let me find it here. Watching the metrics, so inflation by G20s. That's what I've been tracking. And if you go to the last data point, Spain, Netherlands, U.S., 8.5. So U.S. inflation stickier than the Eurozone. Euro still not great. UK, still up. Japan, super low. Weird. Switzerland, still super low. Okay. There you go. And the Boston Marathon begins. Good luck, runners. Okay, so dollar index. Again, I think path of least resistance on dollar index continues to be fairly up. We have this multi-year resistance right here. 2016 highs around 12,639. We had our kind of flash crash move through the COVID crash in March 2020. That got all the way up to 12,958, but quickly reversed. So this was a weekly candle. So you can see, 1 week up on the flash crash, 1 week all the way back down to smash this thing, creating that high reversion or that high resistance. And I'm wondering if we repeat something similar. Not necessarily a flash crash move, but something where we're coming up here to resistance and then giving it back. Okay, so I think even if you are long the US dollar, which is probably a safe play for right now, I'm very curious to see where this thing can form some highs. Is it going to stop going up here, or is it going to get up to these COVID highs? I don't know, right? But I know traders are watching wave 1, wave 2, wave 3, wave 4, wave 5. So even if we come to this high or this high, believe me, I will be looking to sell an ABC correction on the dollar index. So that translates into currencies. How that plays out, I'm looking to probably get long euro dollar, pound dollar, Aussie dollar, New Zealand dollar. Dollar CAD is still going to be kind of hinging on what oil does. Oil is dollar strength has been going up. Oil has been recovering. And here is the daily price. It's a 103.72. We're holding these levels around 94 pretty firmly. We haven't broken the highs at 130. Again, highs and lows that may be contained. Lots of volatility inside these prices. Set your chart alarms. Okay, chart alarms here. Oil, 93. I'll just put fresh lows. Are we testing them? Are we closing below them? Testing lows or closing lower? Right? We'll find out. Or are we bouncing off the lows? And then set chart alarms here at the highs. 129.95, breaking highs. Breaking bad, breaking highs. All right, so we'll surround the prices there on oil, gold, and silver. So dollars up, gold is up, oil's up. That's weird. That's not really a normal correlation. Gold could be heading back up into these same highs again. 2050 to 2075, major levels of resistance. I think that'd be a solid level for rejection. We've talked about this a lot in the flex room. High to low, lower high if we form one, lower low to push back down. There's also some bearish alignments and harmonic patterns within this context and these technicals. So if gold ends up finding this kind of halfway point, there's a weekly pivot right here around 2000. So we could have some resistance hitting gold. If we see something pretty obviously bearish, then this might be looking for a turn to head back down. So we could have high, low, lower high, lower low on gold. Right? So I'm looking for an area where gold can get short or looking to sell off these highs. Long term, I'm still very much bullish on gold, bullish on silver, but looking to see if we have a corrective move that plays back out to these past resistance levels. I'm not drawing that very straight, so give me a second. These past levels here, resistance becoming support, but how do we get there? Are we forming a double top, or are we going to have a lower high to lower low? I don't know yet. So I'll be watching gold for that this week. Silver. Silver's up, which I'm happy with. This is actually one of my larger positions in my stock portfolio. I've been building lows here since the low 20s, and we're up some decent shares. So I'm going to set a chart alarm here at 26.96. See if I can grab, well, I have covered calls on SLV all the way to 26.50, which is up near these 29.50 highs on XAG. So highs being tested / broken. Just something to notify me to take a look at my charts. Okay, Draghi test positive for COVID. I mean, he's no longer the ECB president, so that's old news, man. Probably not good news, but yeah. Let's see here. So silver looks good. Dollar's up, silver's up, gold's up, oil's up. Strange, but that's how it's playing out. Commodities in general doing pretty well. DBB looking up. DBC looking up. FTGC looking up. These are all stocks we're playing in equities on demand. Doing pretty well. Corn, CORN. That is the wrong one. I need to go to that fund here. Up to new highs. WEAT, wheat, same thing. Hopefully we'll see this one head higher. We're pre-market up about 20 some cents. We're up right now. If we took ownership of this, we own this at 1040. We're up about 70 cents right now per share. And hopefully we'll come back and take out these highs at 1250. We can talk about doing a little quick, $2 to $3 repair on this one if we want. Let's go back to, I did silver. Let's go some crypto. I know Bitcoin's back below 40K. We're at 39,380. I did say last week, watching this structure here, we could have some pretty decent support around 37,750 to 38,000. Today's candle looks like it may be starting to show that sign of support. So again, I'd be looking for something bullish on Bitcoin off these lows and see if this support, and support holds, and we have more range-bound trading on Bitcoin to head back up towards 50K. All right. We also, and again, if there's not obvious signs here of bullishness, then wait for a trend line to break and don't force a buy trade. If it falls, breaks the structure, takes out this low, challenges those lows, then this could be that, what appears to be like a really ugly move to the downside could also be a bear trap to bring that momentum lower, and then we start to see a bigger recovery later when everything's on sale. I don't know yet. So there's a lot of wait and see. There's a lot of watch your structure, set your chart alarms, and just be mindful of where things are at. But know what you want to trade. I will make a note here that we are in MARA. It's a U.S. mining company for Bitcoin or cryptos, and we're trading pre-market 20.94. We have an expiration this week, the 30 by 31.50. I got a $15 long put pending. So I may just debate on this one today in class. We have class at 10 o'clock. We might just look at taking, if we can, maybe a $10 to $11 long put and just take it. And if it goes a little bit lower, we'll sacrifice that. But if we get a nice $10, $11 long put, we own this thing in the low 20s already. Any recovery on crypto should also drag this stock with it. If we own it at 20 bucks and it pops up here to 25, it's a good return. Pops up here to the highs at 32, great return, right? Without having to expect a ton of movement out of this stock. So watching crypto and trading accordingly. MicroStrategy is another one I'm watching. Okay, this is Michael Saylor's company. He's massively bullish and maximalistic on Bitcoin. They've been showing some pretty nice recoveries. It's funny how this almost looks exactly like Bitcoin. So we have this channel recovery right in here, and that's MicroStrategy. That's what Bitcoin looks like after this recent fall. So I mean, the guy does hold between MicroStrategy and himself personally. I want to say something like 160,000 Bitcoin or something ridiculous like that. So pretty wild stuff. Okay. All right. Anything else to discuss today? Let's go Ethereum really quickly. Watch your levels. Here's the structure that I'm watching. We're still fading back down. Ethereum has room to drop towards 2,600, possibly 2,500. Same thing. Watch these levels, right? If we don't break a trend line or we don't see obvious bullish price action, wait for a trend line to break, right? It makes more sense to me that with this support, that price would continue to find stronger levels of support, which is around 2,600 bucks. We start turning bullish off of that, then we trade the range back up. Okay, but if it stays on the left-hand side of this trend line, breaks through these lows, we're going to start testing these lows. We might even take out these lows, even if we come back to the backside of the trend line. And this is one thing it's one of my favorite kind of price pattern plays because traders get scared with this. But if we came back down here, so notice how we're on the right-hand side of this trend line. Okay, so here's my trend line right here, right? Dragging it down, everything's on the left-hand side, then we break it. So we're on this channel, we're on the right-hand side. If price falls all the way down here, back to this strong level of support that we had in 2021, right? We could still form a low, even though this is, breaking the trend line area and making new lows. This stronger support with this low to this low could be an excellent buy opportunity on Ethereum. We could go down and crack these 1,700 levels, and then from there, we could come all the way back to the highs. Okay, so I mean, again, stuff I'm watching. So if we do break these levels, this is why I'm staying patient and remaining committed to the levels of buying on these discounts and dips, right? I'm not really excited about buying Ethereum at 3,500. I'm not excited about buying Bitcoin at 50K. If Bitcoin wants to drop, I'll scoop it up. Ethereum wants to drop, I'll scoop it up. Other ones I'll wait on because for the most part, most of your crypto is going to be placed in these giant market cap holders like Bitcoin and Ethereum. So, but crypto is, man, it's everywhere. I mean, I was watching NBA playoffs this weekend. You have Coinbase. I mean, Charles Barkley, Shaquille O'Neal on NBA, whatever it is, talking about Coinbase. Chuck has no idea what it is. Shaq's like, give me $1 million, I'll make it work for you. It's like, I bet you will, Shaq. You'll put it in Papa John's stock or something. Kidding. No, it's like Coinbase. It's a huge sponsor. FTX, all the, Webull, like all these financial plays, cryptos. There's an arena. Miami's arena is FTX or one of the sponsors, right? You have the former Staples Center. Now it's crypto.com or whatever the heck it's like. They're everywhere. So it's not going away, you know. But does it mean it's the savior of humanity? I don't know. Maybe. Maybe it's the only thing to be excited about. But there's other stuff to trade and make money in the interim. Okay. Any questions for me? I'll wrap it up. I want to drink some coffee, take a little break. Class at 10. Anything? Any currencies? I haven't really looked at any currencies today. P&L wise, everything's about the same. Took some profit last week on dollar Swiss and pound Swiss. So dollar Swiss at 94.35. Fingers crossed we get a dip and a pullback. We had a nice little breakout candle here around 93.75. If this thing runs without me to 96, I'm going to be pretty mad. But I decided I was going to take some profit because I was in 12 positions and they all were in profit. So I did. But anyway, we will see what this does. If it wants to continue to run, the dollar index has room to do it. I hope we get a dip and a pullback, though. I really do. I hope that this area, pulls back one more time. We have something like this high, or these lows getting tested again. I'd love to buy some more dips on dollar Swiss and take it back up. Same thing is true on the CAD Swiss. Can the CAD Swiss come off these highs. I took some profit on the CAD Swiss last week at 74.50, 7,500. Also took some profit on the pound Swiss, which was back up to test some of these levels. So I was break even at like 22.50. We came all the way up to 23.35. I had 3 positions, so I was able to grab those 80 pips net, and pretty happy with that overall just to close it. Dollar yen pairs, or yen in general. I know the dollar yen's creeping a little bit higher. The yens haven't quite turned over yet. Here's currency strength for the day. Probably pretty quiet. So we have Aussie, New Zealand weaker. Baseline is pretty much everything. So dollar, euro, Swiss, yen, and pound just off the lows. Vertical index is pretty tight. So not a ton of volatility in open space yet, but we have Aussie, New Zealand on their heels right now. So that's how at least today's shaping up. Again, Europe is closed, so it's been a pretty light London session. Maybe the New York session here kicks things off. Wall Street's about 4 minutes away from the open. For this week's in the news, we don't have any major catalysts to really drive it. So watch the yen crosses. I know they're unpleasant. I know they're not fun, but if you look at the chart objectively, it's hard not to be looking for opportunities to sell. Okay, and I'm not saying aggressive. I'm not saying call the tops, but I've got some stop sell orders in on Aussie yen, CAD yen. I'm watching these levels pretty carefully, but I know that it hasn't turned yet. I've got a pending sell at 99.50 on the CAD yen. It hasn't broken yet, so I'm just waiting because if this keeps going higher, I'm not going to chase this thing. I'm not going to buy these, already ridiculous 7-week bullish candles. And I mean, I think the CAD yen is what I'm talking about. There's like 13 straight weeks of bullishness. Wait. Not 13. One of them does. 1, 2, 3, 4, 5, 6, 7. 7 straight weeks of bullishness on the CAD yen. Dollar yen. This one has a pretty good count. 1, 2, 3, 4, 5, 6, 7. So we're now 7 weeks into bullishness on yen crosses. We typically have this like 7 to 10, 7 to 11 candle cycle. We have crazy overbought conditions and extensions, but I don't want to call the top because it could be wild and crazy. I warned traders last week of a potential flash crash. We didn't see it, but watch your levels, right? Watch your levels, set your chart alarms. If you are able to take some profit on any types of sell-offs, make sure you're moving stop losses. I mean, if we have the dollar yen falling back down to this level at 121 and change to find this pivot cluster, it might be good enough just to take some profit and not worry about it. Okay, it also might be the best topping formation in the world to take a swing trade on and have a stop loss above and see if this thing just resets the entire amount. We're up to these multi-year highs, but I know it's Japanese yen. I know they do wild stuff. I know Kuroda's like sticking to his plan and like, hey, we have all this money. We'll just throw it back in the markets and buy our Japanese government bonds, right? New Zealand yen, we'll take a look at that one, sure. New Zealand, yeah, I mean, New Zealand looks like it's probably closest to turning the corner. If we break and close below this area around 85, I'd say like 84.90. If we break below 84.90 with a 4-hour candle or a daily close, obviously that looks a little bit more promising. Again, I wouldn't really look super aggressively to the downside, although it certainly come back and find all these inefficiencies. But I would look at something like this. This is a great candle to trade back to right here. That entire inefficiency plus that monthly pivot right around 83. So if you're short at 84.90 or you want to take a stab at 84.90 then sell it again at the highs at 86 and change, have a stop loss above just to protect yourself in case it does something silly. But if we break out below and we quickly go down there, that should be a nice little chunk of profit for almost 200 pips. We test, sell the highs, resistance holds, sells back off, great position, not a lot of risk. Like sell high, low risk, high reward. Pretty decent. Yep. But yeah, be careful. That's what I'm saying. Be careful, trade smaller, take your pips, set your chart alarms. Just know what this thing's doing. So chart alarm here, 84.21. I'm just going to get this one lined up a little bit. So I think this pivot right here, right around 82.94, plus come back and fill that one inefficiency, which is this previous resistance breakout point, which is around 82.50. I think 82.50 is pretty doable. This is New Zealand yen. So I'll set a chart alarm at 82.55. That is pocket. Oops. Chart alarm is CTRA and SLV crossing above highs. Good. 82.55. So pocket, hit, monthly pivot, hit, protect, sell trades. All right. So Wall Street is open. We'll get a glance at the heat map. If you have any other requests, go ahead and type it in. Otherwise, we'll wrap things up. Let me go to FinViz really quickly and take a look. Kicking things off, just getting started. We're seeing a jump on the Dow. Go to Market Watch. What's up with futures? Futures for the opening. Risk on bout for stocks and bonds. Futures, I'm not seeing anything printing. Let's go to futures. Here we go. So we've been on the recovery to kind of square things up before the open. So 0.06 on the Dow futures, negative 0.19, negative 0.27. But heading back up to try to at least get back to break even. U.S. markets to kick things off. Let's go SPY really quickly. SPY, DIA, and Qs. So we gapped lower. We're filling the gap. We gapped lower, filling the gap. And we gapped lower, filling the gap. Like I said, the week is young. We have a whole week of trading. There's no holidays. I know Europe's on holiday today, but Tuesday, Wednesday, Thursday, except some fireworks and volatility and Forex just to see if things are moving. Path of least resistance. It's pre-summer push time. We're right in the heat of it. April and May, we typically see some good trends and follow-throughs. The JPY, of course, is not necessarily the exception. I mean, it might just be still drifting, holding at these levels, and annoying traders that are trying to look for some movements. Let's see here, crossing 26 above for full credit. So we're up to new highs on DBB. So we own it cheaper. We can start talking about covered calls today in class. Good. All right. Volatility. Before we go today, volatility gapped higher, starting to fill that gap very quickly. So amateurs open, pros close. See where things are at today at 4 p.m. Keep an eye on chart alarms. Let's have a good trading week. I will see you back here on Friday morning for the wrap up for the Pulver Report, 9 a.m. at youtube.com/Chris Pulver. Again, really quickly on the, let me go back to the social stuff really quickly. If anybody heard me coming into this, what you see on the screen, those are my handles, all right, at Real Chris Pulver. If it's something other than that, if it's a number, if it's an underscore, if it's spelled wrong, it's not me. And I don't reach out to you personally, okay? If you message me, I'll reply, but I do not reach out. I'm certainly not soliciting. Please block, flag, report, all that crap. It's super annoying, and I've had hundreds of people reach out to me asking, like, Chris, is this you? No. Okay? So do me a favor. Please stay on top of that. Be vigilant. Get those scammers kicked out. Okay? That's going to be it for me today. I'll see you back here on Friday morning. Have a good week in trading. Flex Room, see you Tuesday, Wednesday, Thursday. Same time, same place, 8 a.m. Equities on demand, 10 a.m. all day this week. We're going to have a full week ahead. Expirations on the 22nd. Lots to talk about this week, of course. See you then. Okay? Thanks, everybody. Have a good week. Bye.